Will investing in the Max Life Monthly Income Advantage Plan help you create wealth in the long run? Let us find out through an in-depth analysis in this video. So hi there, welcome back to holisticinvestment.in, where we help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. Now before analyzing this policy, let us first understand a few basic details about it. So this is a life insurance come monthly income plan from Max Life Insurance. So some of the key features of the policy are it offers you 15 different plan option called variant. So these variants differ with the premium payment term and policy term. So the lowest policy variant is 6 pay 16, which means the premium payment term is 6 years and the policy term is 10 years. Whereas the highest is the 15 pay 45 policy variant. So on completion of the premium payment term, the policyholder will start receiving monthly income until the end of the policy term. And there are also benefits available like death benefit, which will differ based on the option you have opted for, like a lump sum benefit or policy continuance benefit. And there are also maturity benefit, which will differ based on the plan variant you have opted for. So now, as we have a basic understanding about this policy, let us now move on to the analysis part of the video, where we are going to conduct an IRR analysis to help us make a more informed decision. So based on the benefit illustration given in the policy brochure, we are going to calculate the internal rate of return of this policy now. So for calculation purpose, let us assume that a 35-year-old male is purchasing this policy. So the policy term is 25 years, premium payment term is 15 years, that is 15 pay 25, and the annual premium is going to be 75,000 and the sum assured is 14,16,966 rupees. From the 16th year onwards, you will start receiving a monthly income of 11,808 rupees, which is 1.41 lakhs per annum. So you will receive this monthly income for 10 years, that is till the 25th year. So under section 80C of the Income Tax Act 1961, premiums paid up to 1.5 lakh per annum are exempted from tax, whereas the maturity benefit or the death benefit are exempted under section 1010D of the Income Tax Act of 1961. So it is the same as with any life insurance policy. So the tabular column presented here shows the actual return rate you can get from investing in this policy for this example. So even though the policy benefits looked attractive, on doing the calculation in here, you can see that it is straightforward that the return rate is just 2.23% for an investment of 25 long years. A 2.23% return is far below average and not worthy of any investor's consideration. In case of reversionary bonuses and terminal bonuses are given by Max Life during the term of your policy, you will also receive 2.54 lakhs at the time of maturity of your policy, assuming the bonuses are compounded at a rate of 4% per annum. But you should remember that compounding rate is not certain and only assumptions. So suppose you died at the end of the 17th year, your nominee will receive a lump sum amount as an insurance benefit. So this lump sum amount is likely to be equal to the assured benefit of 14,16,966 rupees. So your nominee will also keep receiving the monthly income of 11,808 rupees per month for the remaining period. So that is one of the special case scenario. Another special case scenario could be, now suppose you died at the end of the 8th year after taking the policy. So you died after paying only 8 annual premiums of 75,000. Even without paying the annual premium for 15 years, your nominee will receive the full assured benefits, which is a death, survival and maturity benefit. So the remaining premiums will also be waived off, and from the beginning of the 16th year, your nominee will also receive a monthly income of 11,808 rupees for the next 10 years. So now, as we know that this policy is not giving us the desirable outcome that we need, we are going to explore alternative strategies in this comparative analysis. So we are going to use the same premium, but we are going to split it between insurance and investment separately, just to see whether that can generate us for better incomes or even superior cash flow. So here, for life cover purpose, we have purchased a pure term life insurance policy with 14.50 lakh sum assured, which cost us only 16,700 rupees annually for premium for a 25-year policy term with a 10-year premium payment period. So this leaves us with 58,300 rupees annually for investment plus an additional 75,000 in the final 5 years, since the term plan's premium payment period is shorter, which is 10 years versus 15 years in the max life policy. So if you're a low risk investor, you might prefer debt instruments like the public provident fund PPF, while if you're a high risk investor, you could opt for equity based options such as an equity mutual fund. For this analysis, we are going to consider the equity mutual fund route. So the accumulated equity mutual fund corpus is later transferred to an investment yielding 7% annually, serving as a source for regular withdrawals while ensuring a final lump sum withdrawal at maturity. So the pre-tax maturity value of the equity mutual fund investment reaches 25.53 lakhs. After the capital gains tax, the post-tax maturity value stands at 23.69 lakhs. So this corpus, when shifted to a 7% yielding investment, generates annual withdrawals similar to the annual income of the max life policy, followed by a full withdrawal at maturity. So the resulting internal rate of return, the IRR, is 8.01% for this investment. So this return could be even higher if withdrawals were avoided, providing greater flexibility to manage cash flow as needed. But in contrast, the max life policy lacks flexibility and offers relatively lower returns, making it a less favorable choice. So what is the final takeaway then? Should you buy the max life monthly income advantage plan? The clear answer to this question is no. I believe the reason is obvious by now, but I want to reiterate from the investment perspective. You can earn a much higher return by investing in alternative investment instruments. So if you are a risk averse conservative investor, you may consider investing in PPF. With a slightly better risk tolerance, you may choose to invest in an equity mutual fund. If regular monthly income is your need, you can always set up a systematic withdrawal plan and get monthly income along with higher growth in the long term. On the other hand, you can get a far higher life cover from a term insurance plan by paying a far lesser premium. So just as I stated earlier, Max Life monthly income plan is a below average investment option even for an endowment policy. So it's better to avoid such policies.
You can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.